impact of corporate decisions extends far beyond financial metrics, ESG, so environmental, social, and governance aspects, has emerged as a powerful framework. It guides institutions towards a more holistic approach for success. It's no secret that ESG and sustainability in general are currently the most important agenda item for a lot of organizations and countries as a whole. But the big question that we're often confronted with is how can we tackle it together? So we at Protivity are launching this knowledge series on this key topic, and we're very excited because today is our first, and it is titled COSO Framework on Internal Control over ESG. It is my pleasure to introduce to you our speakers for today. So we have Robert Hirth, Senior Managing Director at Protivity Global and former co-vice chair at the Sustainability Accounting Standards Board. Sanjay Rajagopalan, Managing Director at Protivity Middle East and practice lead for internal audit and financial advisory. And last but not least, Darshan Mehta, Managing Director also in the Middle East region, responsible for internal audit and financial advisory and our regional expert on ESG. So today we will cover the importance of ESG. We will dive deep into ESG in the Middle East region and what that means for specific countries. And we'll talk a bit more about the COSO framework. So with that, Sanjay, please take the virtual stage and formally open today's session.
Sure. Thanks a lot, Purti. Good afternoon, good evening. Welcome everyone to this session of the ESG webinar. ESG is a current hot trending topic, not only in the region, but across the world. And particularly the E in ESG, the environment aspect of it is top of the mind for everyone, especially with regard to climate change. And obviously we are seeing that impact of climate change, and everyone has started, capturing the elements of climate change as well as the impact which is, being created across the world. ESG as a topic has also evolved from a should do to a must do in many countries. And obviously the regulators are playing their part in driving that change. And as we speak, a lot of organizations in the Middle East have also started taking the initiative, in terms of reporting on ESG matters. In fact, even without, regulations, some of them even started earlier than that. But with the advent of regulations, there's a lot more happening on the regulatory reporting side on ESG. So with that, in today's session, one of the topics is how we use COSO framework on internal control over ESG reporting. That's one of the first series in the entire webinar series which we have planned. And my colleague Darshan will first cover what are the trends in the region on ESG, and then we will hand it over to Bob Hirth. Over to you, Darshan. Darshan, you're on mute.
Sorry. Thanks, Sanjay, and good evening to everyone. So when we talk about ESG, as Sanjay mentioned, it's a very trending topic across the globe. I would just like to take a step back here and see, if you see globally, when we talk about sustainability, ESG, it's been into the trends for more than a decade now. Whereas within the Middle East, if you see in the last 1 year or so, it has come into a very high prominence and at a very high pace. Now, just to give you an example, Putik, can you go to the next slide? Yeah. To give you an example, very recently, we had a global conference of audit within by IIA in Abu Dhabi, and the entire theme of the conference was sustainability. So you can imagine the impact or the impact which it wanted to create with respect to sustainability within the region. Similarly, as we speak, we're having the COP28 conference in UAE, which is all about sustainability. And that's the first time ever COP28 is happening in Middle East. So there is a major trend towards sustainability and ESG within the Middle East. Similarly, in early 2024, there is a global conference in Saudi Arabia, again on sustainable finance, sustainability, talking about local businesses, talking about supply chain, sustainable supply chain, and things like that. So you can imagine the great importance which has been given by regulators, by government, by public organizations, by private organizations to this subject and to this topic. So if you see, there are four main pillars within the Middle East which are driving this subject across the region. One is the institutions and the regulators. So majority of the regulators within the Middle East countries have come up with recommendatory guidelines with respect to ESG reporting, with respect to sustainability and things like that. Similarly, financial institutions, banks are coming up with their own frameworks and so on and so forth. Majority of the public investment funds of most of these countries have come up with green revolution, green funds, and things like that. Similarly, there's a lot of economic diversification initiatives taken by public companies, private companies with respect to sustainability. Investor and stakeholder expectations. Now, this is very critical because uh, gradually we have been seeing a lot of importance being given to this subject, including in the board meetings, in audit committee meetings. While discussions happen, a lot of decisions are taken considering sustainable practices. So these are some of the key elements which are driving this growth within the ESG and sustainability in the Middle East. Put the next slide. Now, if you see the trajectory in the GCC, in June 2020, Bahrain started or rather issued reporting guidelines. Again, these are all recommendatory at this point in time, but very soon we will see a shift towards mandatory reporting of ESG across the region. So it started with Bahrain, UAE then eventually UAE, Saudi. All the countries have their net zero commitments issued, and we will talk about that in the subsequent slides. Saudi PIF has issued a green fund, announced. Saudi Aramco has announced a fund for sustainable practices. Oman, and finally COP28, which I spoke about, which is happening as we speak in UAE. All the countries within the GCC, Oman, Saudi, UAE, Kuwait, and Bahrain have their visions, Vision 2030, Vision 2035, and so on, with respect to sustainable practices, transparency, and net zero carbon emissions. Some of the key themes which are coming up within the ESG practice or other ESG uh, framework within the Middle East is renewable energy. Now, we all know that Middle East has predominantly been a fossil fuel country, and this is a major shift which is happening where there is a lot of investment happening in the renewable energy segment. Countries like Saudi, UAE, Qatar, they have invested heavily into this particular segment, which will be basically focusing on reducing the carbon emissions by utilizing renewable energy. Similarly, energy efficiency conservation. Most of these countries have come up with regulators who are primarily focusing on energy efficiency across the country, and that is a major shift. In the last 3 years, if you see Saudi Arabia, Bahrain, UAE, they have regulations issued from energy efficiency perspective, and regulators who are monitoring this on a uh, periodic basis. So these are some of the important aspects from an environment perspective. Another major shift which has happened is on the social aspects. Diversity, inclusion of women participation in employment, youth employment programs, major investments in this particular aspect across all the countries. and more importantly, improving the health and safety standards in the working environment across the Middle East. Similarly, governance aspect, ethical supply chain, data privacy, cyber security, and as I said, most importantly, discussions within the board meetings, audit committee meetings on sustainable practices. That is a major shift which is happening. It's a long way to go, but at least it has started. As I said, majority of the stock exchanges have issued voluntary guidelines as of now for ESG reporting. But very soon we would expect by 2024, mid 2024, that most of the countries would make this mandatory for listed companies, as well as financial institutions would come up with their frameworks for uh, the financial system. Yeah, put the next. So we'll quickly go through each of the countries. So if you see KSA, as I said, they have a net zero target of 2060, and a major focus is on local businesses, sustainable businesses, diversity, and alternate or renewable energy. So that's something which has started within Saudi Arabia, and not just the public companies, but also private companies have got into the race with respect to achieving the net zero target, as well as the sustainable goals which the country has defined. So similarly, UAE has come up with their framework. By 2030, there is a green agenda to increase the UAE GDP by 5%, exports by 24 to 25 billion, and reduce the country's emissions to less than 100 kilowatt hours. So that's a major shift which is happening, and in the next few years, UAE will be also getting into the same thing. Similarly, Qatar, the major focus is on human development, social development, corporate development, and economic sustainable practices across the country's vision. So Bursa Kuwait has also issued recommendatory guidelines for listed companies. By next year, we expect that this will become mandatory for all the listed companies, and they have urged all the companies to have a unified direction for sustainable future. And reporting mechanisms have also been recommended in Kuwait. Bahrain also, they have their vision already defined. In addition to that, they've also further gone ahead and talked about how companies can get to that vision. So a entire process strategy to that level, the recommendations have been developed in Bahrain. Muscat Stock Exchange has also issued guidelines for listed companies just like Kuwait, and we would expect in 2025 that this would be mandatory for most of the listed companies. So with that, I would pass it to Robert Hirth, who is our subject matter expert on this topic, and who would talk about the COSO framework, because one of the most important aspects of sustainability and ESG is the reporting, how the organizations are reporting about their sustainable practices. And one of the key frameworks which have been issued in the recent past is the COSO framework on sustainable reporting with respect to the internal controls. So Bob would talk about this particular subject in detail. Uh, Over to you, Bob.
Great. Thank you, Darshan, and good evening, everybody. It's great to be with you. And again, the title of this guidance is called Achieving Effective Internal Control Over Sustainability Reporting. And we've coined a new term called ICSR, Internal Control Over Sustainability Reporting. So it's a great document and be helpful to all of you. You know, one of the questions that we get is why now? And Darshan has given you a good sense of this. You know, we've had a significant amount of voluntary reporting all around the world. But as Darshan has mentioned, it's really moving from voluntary to regulatory probably, in my view, because it's now become so important. Regulators are generally behind the market. And this is a good case where we've had companies now for a number of years reporting on sustainability and in what I'll call the ESG format. And as stock exchanges and other regulators now require it, it's going to be really important or critical or expected that any organization that is reporting on sustainability or ESG does so in a way that has effective internal control over sustainability reporting. So as the slide says, this is a big deal. This is going to impact companies all around the world, regardless of size, especially private companies just as much as public companies. And let me explain that. Where you as a private company have a public company customer, and that public company customer needs to report some of their emissions coming from their value chain, they will be asking you for that information. So you will not be immune as a private company to be reporting some information on sustainability. So let's go to the next slide. Many people ask, what is COSO? It actually stands for the Committee of Sponsoring Organizations of the Treadway Commission. And as you can see at the bottom of the slide, it's comprised as a joint initiative of really the leading accounting and reporting membership organizations that we have in the United States and in some respects around the world because of U.S. stock exchange companies operating all around the globe. And as you can see here, the mission of COSO, and I was the chairman of COSO from 2013 to 2018, during the time that the actual 2013 internal control framework, which is the base framework to which this guidance applies, was developed. And the whole notion at the bottom, our vision is not to be just a U.S. organization, of course, but to be globally recognized as an authority so that all companies use this. When we talk about internal control, I think you have to say, what does that mean? So many of you may have your own definition of internal control, and we do at COSO. So it's really important here is to understand we've defined internal control within the COSO framework. We have a way for you using this internal control framework to come to a conclusion that you have effective internal control over whatever you choose it to be. That could be financial reporting, that could be sustainability reporting, that could be a function within the company. So I challenge all of you to think about what is your definition of internal control? Do you really have one? And how is it supported? The answer I'd like to give you is we at COSO have a definition of internal control. It's supported by a framework, and it allows you to come to a conclusion about internal control over any particular topic you wish to apply it to. So let's go to the next slide. As Darshan mentioned, the COSO framework is used as the suitable criteria for reporting on internal control over financial reporting. So essentially, every single company, wherever it's located, that is on a U.S. stock exchange that has to comply with the Sarbanes-Oxley Act of 2002, it does so using the COSO framework. So as many of you know, each company has to come to a conclusion about its effectiveness of internal control over financial reporting. And the question becomes, when you ask 5,000 or 10,000 companies to do that, according to what? And the answer is according to the 2013 COSO internal control framework. So it's really important to understand that the COSO already has a very significant grounding and acceptance and credibility among all companies that are doing financial reporting. So it's very logical that we extend and expand the guidance we have to sustainability reporting. Let's go to the next slide. So as Darshan mentioned, this is reasonably recent guidance. We call it supplemental guidance because it's really helping you understand how do you apply that hard-coded 2013 internal control framework to sustainability reporting. And we've used the word sustainability reporting because we can argue, but we could argue that sustainability, or we believe sustainability is greater than just ESG. ESG in a sense is a reporting regime, just like we have a reporting regime for financial reporting of a balance sheet, an income statement, a statement of cash flows. For sustainability reporting, we have the E section, the S section, and the G section. So In March of 2022, about 18 months ago, the COSO board announced that they would complete this project. We did so in about a year. So on March the 30th, 2023, the publication was released. And I'm happy to report to all of you, we've had just a great reception to the material. People have really been eager to understand how you apply that internal control framework, because without question, I know all of you, as your organizations report on sustainability, you want that information to be complete and accurate. And one of the ways that you do that, of course, is by having effective internal control over that reporting. So next slide, please. So as many of you know that are in the internal audit profession, we have a new chair of COSO, Lucia Wind. Now, she's actually the chief audit executive of a large U.S. public company. And we asked her to give her comments on this. And what you see here is, she says this is absolutely needed. We're at the beginning, in some respects, of very important, now regulated reporting by a number of organizations. And a good example of that for all of you IFRS reporters will be the International Sustainability Standards Board. As its standards come into play, as Darshan again mentioned, in late 2024 and in your 2025 reporting, it will be seen how each country or jurisdiction adopts the ISSB standards, just like they adopt IFRS standards. But don't be surprised if all of the countries each of you work in adopt those ISSB standards and come to some form of requirement in terms of size of company, the timing of that reporting, and very importantly, to what extent third-party assurance will be required for that reporting, just like it is for financial reporting. So the IA is one of the COSO sponsors, and we've got just superb support from them. And over on the left-hand side, you see our cover and its title, as I mentioned, Achieving Effective Internal Control Over Sustainability Reporting. And we've, as I said, coined or created this new term called ICSR. So let's go to the next slide. So one of the things that's important to know is we actually started with an existing document. In 2017, four of the six authors actually developed a similar document, and it was developed by the Institute of Management Accountants, which many of you know. So it's good material. In fact, I think it's still available at the IMA website, but it was a little bit ahead of its time. So it took this same concept that obviously you want effective internal control over sustainability reporting. In a way, obviously you should refer to the COSO 2013 internal control framework. So it was well done, but as I mentioned, companies really weren't ready for that yet. We've had a very fast and significant growth in sustainability reporting just over that 5-year period. So for some of you, you might find it interesting, and I think it's still available on the IMA website, as I mentioned, to find this document, because there's some good real-life example companies that are featured in the document. So that's a little bit of the background that we worked on. In total, we have 6 co-authors. They're listed in the book, but there's some very experienced people, and we were able to really work together as a team to put this document together. Next slide, please. So as you can see, what we've done is the guidance over on the right does not supplant, does not replace the COSO 2013 internal control framework. As I mentioned, that framework can be used for any kind of internal control, and thus any kind of reporting. If you did specific investment reporting, if you did specific health and safety reporting, if you did specific reporting over the operations of a certain group or function or geography, the COSO internal control framework can be used for any aspect of internal control and any aspect of reporting. So many of you have become fondly aware of the COSO cube, which you see on the left. So the whole notion is that cube can still apply. Our document shows you how you apply that framework specifically to sustainability reporting, and therefore we call it supplemental guidance. So let's go to the next slide, please. So one of the things that happened in the 2013 version of the internal control framework, the original framework had been developed in 1992, because back then there was some fraudulent financial reporting, and people figured out that there actually wasn't a definition of internal control. So that's how this whole thing got started. And then, given the fact that that framework was from 1992, we updated it in 2013, went through a due process, got public comment, had a great advisory council and set of authors on this. And one of the very important things, if you go back to the 1992 cube, which was black and white, one of the objectives was called financial reporting, because we had fraudulent financial reporting. And a very important change that we made in 2013 was to get rid of the word, or delete the word, financial from the reporting objective. So what that did is that made made it very clear that the COSO internal control framework applies to all types of reporting. So let's go to the next slide. And so what you see here is the exact wording from the 2013 framework that explains, by striking a word, we actually expanded the application of the internal control framework, again, to apply to all reporting. And we defined reporting as internal, external, financial, and non-financial. So let's take sustainability reporting. If it's external, it's covered. If it's internal, it's covered. So one of the really important reasons why we also felt now was the time, as you can see here, on U.S. stock exchange companies, the top 500 companies are called the Standard & Poor's 500. And as you can see, through 2021, the steady growth of those large companies that reported sustainability in some way. And I will tell you, to update this, it's gone from 96% in 2021 to 99% in 2022. If you look at beyond those 500 companies to the top 1,000 companies, it's now 90% of the top 1,000 companies on U.S. stock exchanges. And that smaller group of 501 to 1,000, 82% of them report. So those are somewhat smaller companies. They're not real small. But as you can see here, it was really important that we get some guidance out, because so many companies are reporting on sustainability. You know, a couple other reasons, really importantly too, is we saw that this moving from voluntary to regulatory. So there are going to be some clear compliance responsibilities on companies. Because it would be regulated, there could be fines and penalties related to that. And we also see that there are many stock exchanges, and Darshan did a good job of taking you through country by country and all the regulation that now is occurring. So this is actually great timing. As I mentioned, we've had superb reaction. If you go to the next slide, just to share with you, the table of contents I'd like to suggest is in 3 sections, and we'll talk about this at the end. You can get this material. It's available for free. It's available at coso.org. And there's a first section that really spends a little bit more time talking about what is COSO, because we know that our audience for this document is greater than many of you that are involved in financial reporting, who already may know about COSO and know about controls. We then spend time, of course, taking the internal control framework, taking the 17 principles in it, explaining how specifically they apply to sustainability reporting. And the third section is a series of illustrative examples that should really help you understand how some companies are actually doing things related to internal control around their sustainability reporting. Let's go to the next slide. So I think one very important thing is, how does this sustainability reporting differ from financial reporting? And this slide is directly out of the guidance that I'm talking about. And it really suggests there's for sure 3 significant differences. On the left-hand side, very significantly, is we think about financial reporting. It's usually reporting around the entity, the legal entity, the 4 walls, if you will, of the corporation or the organization. Sustainability reporting really transcends those boundaries. A great example of that is the greenhouse gas emissions that come from the supply chain or value chain of the organization that get reported as something we call scope 3 of greenhouse gases. So the boundaries are expanded. In the middle, you see the fact that there's a lot of judgment involved in the qualitative information that's provided. And certainly we have some narrative in financial reporting, But you see more of that in sustainability reporting and certain claims that are made that are qualitative. So there's a lot of judgment in deciding what you report, what don't you report, and how you say it. And then I'd say, just as important as the expanded boundaries, financial reporting has tended to be historical. It's rear view mirror. It's what happened last year. And certainly baseline and past sustainability information of the prior year or years before are reported in sustainability or ESG reports. But once you get that baseline information, everyone asks, so what? What are you going to do about that? And so there's a whole area in sustainability reporting of metrics and targets, which talk about the forward-looking changes that a company plans to make around its greenhouse gas emissions, or around its diversity, equity, inclusion, or around its governance, or around the use of materials, or reduction in water, or reduction in energy, and so forth. So it's important to understand these differences. Again, this comes right out of the guidance. Next slide, please. So one of the things that we do right off is to make sure we have a grounding or understanding of certain terminology. I think this is really important, just like we have terminology in the internal control framework around reporting objectives and things like control environment and risk assessment and control activities and monitoring, which again are part and parcel of sustainability reporting. We've gone ahead and defined sustainability. This comes from the Broadbent definition that comes from the late 1980s and a definition that came from the United Nations. We talk about what is a sustainable business and the activities and actions that go on in there. And then we talk about ESG. As I mentioned, ESG, we like to think about as a reporting regime. It's a subset of sustainability reporting because it organizes it in a certain way. So it's important to understand those definitions in the new guidance. Next slide, please. So as I mentioned, we're not supplanting the COSO 2013 framework. It still applies. So these 5 objective areas, or components as we call them, the 17 principles. And remember, just like financial reporting, the notion here, if you want to use the COSO framework and come to a formal conclusion about the effectiveness of internal control over that reporting, all 17 principles must be present and functioning. So you would take the same approach that you would take for internal control over financial reporting. It's just you're dealing with different information, remembering that information is a little different because it transcends the boundaries of the organization. There's more narrative and qualitative information, and there's more forward-looking metrics and targets. So important to understand it's not going away. We're leveraging off of that framework. So next slide. One of the things that you'll note in the 2013 framework is we have the 17 principles, and many of you say, okay, Bob, those principles need to be present and functioning, but I don't fully understand those. I need more information. And so as part of the structure of that framework, for each principle, each of the 17 principles, we have a series of points of focus. So over on the right-hand side, you can see the number of points of focus that apply to each principle. And they give you a little bit more color, a little more guidance, in some cases, a little bit of examples. And so let's go to the next slide. So what we've done now, this is sort of coming out of the document itself. The actual principle, one of the 17 items, those are reproduced verbatim in this guide. So we didn't change that at all because remember, we're leveraging off of, not supplanting or replacing the internal control framework. But then you see over on the left-hand side, at that bottom half, the points of focus related to that principle, this principle being principle 10 around control activities. And if you get the document, because I know this is a little bit hard to read, you'll find that those points of focus have been reworded or edited to specifically apply to sustainability activity, sustainability reporting, sustainable consideration. So that's where we really give you some more definitive, specific discussion or thought process about in that particular principle and how it applies to sustainability. Next slide, please. So here are some examples. So if you look over at the left, we could have numbered these, but these are the actual words of the points of focus: establishes standards of conduct, etc. And so when you look at that Again, that applies to any notion of internal control, any notion of any kind of reporting you want. And then what you look over here on the right-hand side, here are examples of controls, that give you, that said, more color and have been reworded to address specifically sustainability related items. And in some cases, actually, we concluded that there is no difference between what a point of focus should be for financial reporting or sustainability reporting. So actually, in a few cases, there are no wording changes. But again, this gives you a sense of how we're trying to tell you what these things mean. And again, this material is all available at no charge at COSO.org. Next slide, please. And again, here is another example. In the blue bar up there, you see that's P2 principle number 2, talks about the board demonstrating independence. So that's a big statement. Over on the left-hand side, there's this color that's added around points of focus. And as we show you examples, these are specific, situations that tie to sustainability activity or reporting. So again, another example. Next slide, please. So what I want to be sure everyone understands is the approach to internal control. It sounds simple, and it is simple, but sometimes we forget things. And I think what we forget is sometimes we go right to step 2. We go right to what are the controls? And I have a saying, if you have no objectives, no controls are needed. So you really have to start with what are the objectives? And so what are the objectives of sustainability reporting? They're much like financial reporting, completeness, accuracy, relevance, authorization, rights and obligations properly disclosed. And then you go to the risks. What's the mirror image of that? Well, it may not be complete. It may not be accurate. The calculations might not be correct. Then what do you do to ensure that those risks are covered so that those objectives are met? And then what you do is at the end figure out if those controls are working and they're designed properly and they were tested and they were working to address those risks that we laid out that cover the objectives, then you can ultimately come to that conclusion. So the real key here is that step number 1, determining objectives, sometimes is the hardest thing to do. But what I'd like to suggest, and I think what we suggest through our material, is generally the objectives of sustainability reporting are essentially the same as financial reporting. Like I said, completeness, accuracy, relevance, authorization, right explanations, and disclosures. But as I mentioned, the information subject to those objectives is different. Again, expands beyond the boundaries of the company, has more narrative, qualitative information, and has forward-looking data, not just baseline historical information. Next slide, please. And so as you really begin to get into the detail, and you can take this and spend a little more time with it, you can create your own risk and control matrices of sustainability reporting processes. So just like financial reporting, there are processes that create greenhouse gas emissions information. There are processes in different areas that create diversity, equity, and inclusion information. There are processes that ultimately lead to your being able to report water usage or uses of other natural resources. So again, sustainability reporting does lend itself very much like financial reporting to evaluation of the processes and risks, design of controls, operating effectiveness of internal controls through testing to come to a conclusion, or in many cases, not just to come to a conclusion, but to identify what things need to be changed and improved and evolved over time. Next slide, please. So as I mentioned, we have internal control over financial reporting. Essentially, every U.S. stock exchange company coming to a conclusion about that reporting. And there is a view that sustainability reporting is becoming, or is in fact equivalent in importance to financial reporting. So if you do evaluate effective internal control over financial reporting, isn't it logical to evaluate internal control over sustainability reporting? And though not required, again, if this reporting is as important, isn't it logical that you might come to a formal conclusion on the effectiveness of internal control over sustainability reporting, and there'd be regulation around that? So there isn't that regulation yet, There might be in the future, but even if there isn't, you'd really want to take that same approach. So over on the right-hand side, I've really gone through the major steps of scoping and reporting objectives and evaluating control design and operating effectiveness that you would apply to internal control over financial reporting that can be applied absolutely to sustainability reporting. Next slide, please. So at Protiviti, our view of the guidance is this was needed. We welcome it. We think it's timely, and we think you can begin to use it right away, and it should help you in coming to a conclusion about the effectiveness of internal control. Next slide, please. But it's not always easy. Over on the left-hand side is the challenges that any organization faces around sustainability reporting. Getting it going, the data collection, the processes and controls. So you can see all those, and then, excuse me, the reporting journey and reporting material and materiality does vary by industry. So if you look on the left, you'll see that some of these items in your business matter to you and others do not. So be aware of those challenges, accept them, get through them, and conquer them. Next slide. So the back of the publication itself has 10 key takeaways that we as the authors felt might even want to look at that first to say, what do you really want to get out of this material? So again, it's available at COSO.org at no charge. We hope right after this webcast, you'll go and you'll get it. You'll print it out. We'll plan to send it to you as well. But let's go to the next slide. And so there are other resources. There's also a companion document to the ERM framework about ESG reporting as well. That is also, available at no charge. So go to COSO.org for all of these great resources, and you can see the new website we have there. So with that, I'm going to turn it over to Sanjay.
Many thanks, Bob. Many thanks for that interesting insight. I think just to sum it up, I think two objectives which we had for today's session was one is to look at the developments in the region, which Darshan covered. And obviously, we are seeing that there are a lot of developments in the region, obviously more in the form of guidance, but in the foreseeable future, some of them will become mandatory, and that's where the applicability of ESG reporting comes in. The second objective, of course, is to see how COSO's internal control integrated framework can apply for ESG reporting purposes. And Bob did present, the overview. Of course, the details can be held, I think you get it from the COSO website. We'll also share the presentation after the session for you to read through, and we'll also be sharing the video. So we have a couple of questions. So before we close, probably we will go through the questions, and then if you have any further questions, do drop it in the Q&A box. So the first question, Darshan, for you. So one is, I think, which are the other ESG-related standards expected to be applicable to GCC in the MENA region?
So I think Sanjay, there are a couple. One is first and foremost, not necessarily in timing, but because the countries that you operate in are IFRS reporting countries, the IFRS Foundation has created a International Sustainability Standards Board, and there are standards. Just like the financial reporting standards, the process that will take place will be each jurisdiction or country and regulator will decide, do they want to adopt those standards? Do they want to make some local market changes? And then how will they apply to companies? So for example, will they just apply to listed companies? Will they apply to all large companies over a certain size? And when will that effective date start? And then what will be the level of assurance required, if any? Or will large companies have to have assurance and smaller companies don't? So I would be sure that you understand the ISSB standards. Right now, there are two. There's a general requirements standard and a climate related standard. And begin to think about if our jurisdiction or country approves those, how hard it will be to comply. Now, I'd say, as we would say in the US, on the front burner would be the Corporate Sustainability Reporting Directive, CSRD, something coming from the European Union. Now, when I say that, some of you are thinking, I don't need to listen to this because it doesn't apply to me. Well, if you have a presence in Europe, in any of the EU countries, and that definition of presence is a fairly small organization, you will need to comply with the CSRD requirements, which are significant. In some respects, they're onerous. They require an evaluation of something called double materiality. And to further get your attention is if you're a private company with a presence in the EU, it applies. The timing of this, for the most part, is 2025 information reported in 2026 for your European operations that are over a certain threshold. But your 2028 information, reportable in 2029, will be required to be your entire global organization reported under these standards. So that I would say, as we say in American, is front burner. Now, alongside of that, for those of you that are public companies traded on a U.S. stock exchange, we are all awaiting for an SEC rule that will follow some of the same aspects of these other standards I've mentioned. And the latest we have today is it was announced just in the last week that finalization is now expected in April of 2024. What to me that means that your 2025 information reported in 2026 would be reported under that new SEC rule. But also what's important, and Darshan covered this, you also need to look at your local stock exchange. Those local stock exchanges will likely have some requirements that are ahead of these broader regulations. And I want to emphasize another time, even if you're a private company, if you have public company clients, or if you have a private company customer that's big enough and has EU operations that has to report under CSRD, they're going to come to you to get your greenhouse gas emissions, what we call scope 1 and scope 2, so they can put that in their scope 3. So I want to emphasize that regardless of size of company, regardless of where you're domiciled or incorporated, regardless of who your customers are, you need to spend some time figuring out, does this apply to you and how does this apply to you? So it's really important. So those are a couple things that are out there, Sanjay.
Great, Bob.
Yeah, just to add here, Sanjay, a couple of points. So as Bob mentioned, from a local perspective, most of the countries' stock exchanges have issued guidelines, but there is still no specific mandatory standard which has been issued. And in most of these guidelines, they have referred to applying global recommendatory standards. So, Bob, just another follow-on question from my side. So, from a reporting perspective, we always talk about GRI and SASB. So, are there any other standards, or what is your view in terms of, from a reporting perspective, what are the standards which companies should look at?
Yeah, so obviously the SASB standards, which are part of the ISSB, are something to look at. I will tell you that most U.S. companies report the SASB standards. GRI, as you mentioned, the Global Reporting Initiative, are standards that are older than almost any set of standards, and many companies outside the U.S. report those. The other framework, we might call it, is TCFD, the Task Force for Climate-Related Financial Disclosures. That's a 4-pillar framework that's quite narrative, talks about your governance, strategy, risk management, and metrics and targets. So those are some. There's also another a framework, we'll call it, called the United Nations Sustainable Development Goals. These are 17 goals related to the broad topic of sustainability. And many organizations start with those and then assess from those 17 development goals which ones really apply to them because of their industry. But I think what's most important for people listening today, because your countries generally are IFRS reporters, to monitor your jurisdiction's approval and modification of those ISSB standards, including when they would be effective in your country, who they apply to, and what any assurance requirements are, to be sure that you're up to date. So there's plenty that you need to do to be, again, understand, do any of these apply to me? How do they apply to me? Do any of these standards apply to our major customers? And therefore, how are they going to impact us on what greenhouse gas emission information we more than likely are going to have to report to those customers of ours?
Great, Bob. Thank you for that. The next question is around now all the countries are defining their vision in relation to ESG. Now, there are two parts to the question. One is how organizations will comply to those countries' vision. And the second part is how internal audit in the organization can provide assurance to the applied controls.
Yeah. So sure. So I think, each country may have multiple standards to comply with. They may have their local stock exchange. They may be an IFS reporter. They may have operations in the EU. They may have customers that have operations in the EU that are requiring some type of reporting. So I think what's really important, again, is to sit down and spend more than 15 minutes really looking through each of these requirements. Do they apply? How do they apply? Internal audit absolutely can be a part of this. We in internal audit, or you in internal audit, all have the skills, the good capabilities around understanding process and controls and compliance and requirements. And especially in most all of these requirements, all roads ultimately lead to assurance. In all of these cases, each of these standards have an assurance requirement. And to the extent there is an assurance requirement, having effective internal control over these activities and this reporting will really assist greatly in seeing that that assurance is completed efficiently and that you get the answer that you want. So the IA, global IA, does have some good materials. So I think if you go to the ia.org, they've got some materials on the role of internal audit around sustainability and some other resources. And in fact, I think they now have a certificate program around sustainability for internal auditors.
Great, Bob. Thanks a lot. In the interest of time, one last question before we close. So the question is about the growing popularity of ESG ratings in the financial markets, and considering that different firms provide different kinds of ESG ratings, there is a variance, and then the dependability is in question. So in that case, is there going to be some sort of you know you know rationalization on the ratings, and then how efficiently people can use those ratings when it comes to selection of investments?
Yeah. So I guess Sanjay, my opinion would be, I don't think there'll be a rationalization of the ratings. Each rating organization sees that as their secret sauce, their differentiator, that, their evaluations are the best. Their evaluations are the best. So you should follow their ratings and recommendations and buy the stocks at the particular prices they are suggesting. So I don't think that's going to change too much. What's important with that comment, though, is for each company to figure out which of those raters and rankers matter, which ones are most important, and how you respond to those, and really gaining an understanding of how they came to their conclusion, the grade they gave you. What we see many times is the company has not reported some information the rater or ranker wants, so they get a lower grade because of that, or they've misinterpreted some of the reporting. So I think it's very important for those raters that matter to the organization to have dialogue, understanding their process, understanding if there's anything else that they need that's not been reported, and be sure you also tell your story. I think it's really important for each organization to have, we'll say, a good, effective, meaningful, understandable ESG report with the right, again, qualitative information that's baseline and forward looking. But you really get to the right answer on those ratings and rankings by having direct dialogue with them. Remember, they're probably not going to rationalize, but you got to figure out which ones really count and which ones maybe don't count as much.
Great, Bob. Thanks a lot. We are on the hour. Thanks a lot, everyone, for joining on this webinar. We will continue this series in 2024, and we look forward to you to join us for the next sessions. Thank you, Bob.
Thanks
Thank
all.
you, Darshan. Thank you, everyone.
Thank you. Cheers.
Thank you. Thank you, everyone.